We have seen predictions of 30% unemployment in the U.S. and GDP there dropping by half. In Europe, where the measures are, at least so far, more draconian, do you think we're going to see something similar or worse?
I think there's no doubt that we're going to head into a technical recession. How persistent that will be depends on how the virus spreads, which is something that we still don't know, but the measures that we're seeing in Europe are helping in that direction. It will also depend on the economic support that we're seeing, and we've seen the ECB act with a big package that is open-ended. It says that it will be there for the economy for as long as it's needed. And also, finally, fiscal policy is starting to move, which is very important. You're sitting there in Berlin. We're seeing big measures come out of Germany this week. So I think in that combination, the recession should be contained, and also we should see a recovery after the virus shock is happening. That it's all very, very dependent on how the virus develops, which is something that economists cannot predict.
Are we seeing these economic rescue responses coming quickly enough, Danae? Because it strikes me that you've got rates soaring in certain sectors. You know, in terms of the credit markets, it doesn't seem like there's a lot of liquidity there, and you know, regular people are still going to have to meet rent payments in a week and still have no access to funds.
Yeah. Well, the response we've seen so far has been on a national level. What we really need to see now in the euro area is more coordinated response across the member states and coming from the center. So that's something that is the next step, I would say. The good thing is that there's been a lot of preparatory work on this at the times of the euro area crisis in terms of tools that could be developed. So now all of these developments that we were heading towards in the euro area are really sped up by the virus crisis. The tools are there. The ECB has innovated already. There's more things that they could do. There's more things fiscal policy could do. But we're seeing that sense of urgency. So yes, it's not happened as fast as we would like, certainly with the ECB, which didn't move as decisively in its first meeting. But I think that was also important because it put the ball in the fiscal court, and it meant that fiscal policy also stepped up, which is the first time that we're seeing this. It's something that we have been expecting for quite a while.
So assuming that European governments and the central banks do what's necessary, do you expect a V-shaped recovery then from this?
Well, it's hard to know what the shock of the virus and how it will develop. At the moment, the key issue for central banks is to prevent this economic crisis from becoming a financial one as well. So containing the impact on the markets is important. But in terms of how the real economy is disrupted, that will continue for as long as the virus continues. The fiscal measures, we have room in certain European economies to support that. But I think the recovery is certainly not going to be V-shaped. We're looking at something more persistent here.
Yeah, we see spreads blowing out. I've actually got a chart of high yield and investment grade spreads jumping back to the levels that we saw during the great financial crisis. Certainly, there's a dollar shortage that still seems to be hitting markets hard. Of course, in terms of equity markets, a lot of people have seen a third of their retirement wealth wiped away already. And then in terms of jobs, we're seeing companies laying people off without pay already before any rescue packages have been passed. I just can't see how to view this optimistically, Danae. I mean, it doesn't seem like everything's falling into place as quickly as it needs to. And to say the least, there's still a big problem in that governments don't have enough test kits to find out who has coronavirus and who doesn't.
Yes, no, certainly. We are in a very, very difficult situation. The governments do have room to spend. The borrowing costs for them are very low. Some of these investments will take a very long time to show some results in terms of the economy, but in terms of the immediate things that they can do to support workers that are being laid off, ease pressure on businesses, they are doing these. Not at a fast pace as much as we would like. I would agree with that. That some of these measures are coming in. Now, in terms of the longer term impact of investments, etc., that will take longer to show. But yeah, I think you also raised an important point about dollar liquidity, and that's another thing that we will see become more and more important, especially as the pressure for dollar funding grows, and emerging market economies will be very affected by this. So measures such as the dollar swap lines that we've seen the Fed put in place will be very important for that. But we also need more things from the global financial safety net to support economies that will come under stress from this.
Danae, can you see any alternative to this? I mean, we talk about the measures the governments are trying to put in place to help businesses, but we need to remember that the governments have put all of these measures in place to suddenly stop the economy. I mean, these wounds are self-inflicted. Can you see any other alternative?
Well, there is clearly a trade-off between how stringent measures do you put in place now to contain the spread of the virus, to hopefully be able to get the economy back to normal quicker than you would if you let it spread. So yes, there will be a very big disruption and shock to the economy now, but you have to think in terms of short-term, long-term dynamics here. And it might be a case of short-term pain to be able to have a quicker return to normality later. We don't know how long this will last. It will last months and months from what it looks like. But in terms of alternatives, we've seen the measures that are there to support the disruption. But I think also we have to think about the measures that will prevent the economic crisis from becoming a financial one. So in terms of, for example, debt mutualization in the euro area that we may see in the case of the IMF, bringing up certain liquidity facilities that we haven't seen before. In the case of central banks, more innovation so they can't cut rates much further, but helicopter money have been measures that have been suggested. So there are tools there, and there is more creativity that central banks can deploy, and we may see measures such as these that have been ruled out previously.